If you've been paying any attention to crypto lately, you will have noticed that things are looking very bullish. This looks like the beginning of the next bull run. We are just starting to reach the prices that we had seen in 2017 when it peaked at its all-time high. However, with this time, the price seems much more sustainable. Very sustainable volumes that are much higher than we saw in 2017. And the interest still has not peaked yet. So that we could see a massive blast off, or we may see a correction before the next bullish time period comes around. One thing that I want to take a look at in particular is what we saw with some of the altcoins, in particular with Ethereum. If you look at Ethereum, it was around the same price. We were starting to see Ethereum really taking off, but we saw a little bit of a delayed reaction with Ethereum where it went all the way to $14,000 and in that January time period, about a month after Bitcoin had peaked. And so you'll see some of the altcoins, they might have a little bit of a bullish run as Bitcoin kind of settles in at certain price points. And the one area in particular that I feel has really been driving a lot of that is this institutional investment opportunities that we've seen in the DeFi space. And DeFi is still relatively immature. There are some big platforms out there, but there is a lot of room for growth and innovation in this particular area. And in this video, I want to take a look at one that I've been covering for quite a long time, Growth DeFi, and some of the innovations behind this, because this really deserves a very in-depth look in why this is a little bit different than some of the other projects that are out there, and why this may have even more potential to exponentially increase your gains with this crypto bull run. What's going on, guys? Welcome to Clover Crypto. If you're looking to learn more about decentralized applications, trading, and other passive income opportunities, make sure to subscribe and hit that bell for notifications so you don't miss out. Right now, Grow, along with their G tokens and some of the newer Type 2 G tokens that are going to be launched here any day now, these are having some very competitive APY percentages, and these are on stablecoin pairs. Once you see some of the returns that you will be able to achieve with the second Type 2 layer G tokens that are going to be coming online here in the very near future, that's going to bring a lot of interest. And I think once you start to see some of that institutional money, some of these bigger investors that are interested in this project, you will see a lot more growth and a lot more profit potential inside of this ecosystem, on top of being on Ethereum, which in and of itself is in a massive bull run right now that could potentially really peak here in January, as things are really starting to take off for Bitcoin here in November, December. I think what we will ultimately see is a progressive upward trend. I don't think we're going to see some of the same dump mechanics that we saw in 2017, because there was a lot of reasons for why that that bubble kind of popped at that time. I think this is backed by a lot of volume. These are more traditional investors in the terms of, like, they were used to traditional banking investments, and these banking entities or these types of investments that are on these DeFi protocols are much more refined, they're much more secure, and they're much better, especially with a lot of the uncertainty that's going on around the world right now in terms of all of the money printing, the hyperinflation, the uncertainty with the government, and some of the corruption that's being exposed. People are looking for different alternatives, and there are some really big ones out there right now that look very solid. Their code is open source. They've been that way for quite some time. You have 3 lending entities in Maker, Compound, and Aave that are billion-dollar lending entities that have a lot of money behind these. You have a lot of $100 million projects that are still fairly new when you kind of look at the overall grand scheme of things. And that's why, if you're looking at a project with a lot of income potential, one of the things that you may want to look at is getting into a much larger position in a smaller project with a lot of interest and innovation behind it. Because once a few things start to get rolling on that project, you'll have a lot more income potential on some of these smaller projects. So this is one of the strategies that I'm using in a few other projects that I'm in. Is like one strategy could be is, say, I want to have 1% ownership of this project. I want to have 1% of the overall token supply if that's something that you can afford. Maybe it's not 1%, maybe it's 0.1%. You know, you can set goals behind this and you can grow along with these projects. So as that market cap grows in value, you have that percentage ownership of that project as long as you continue to maintain that as best you can. And one of the ways is to kind of, cycle and compound inside that project. Now with Growth DeFi, all of that is done for you inside of the G token pairs. You don't have the same types of constant interaction that you have with, say, an entity like Compound Finance. It is an aggregate layer that is on top of these G token pairs and all of these different protocols that you will have the ability to earn as that project grows in value. And one of the interesting things that we are going to get a little bit of an insight here very shortly is a concept called PMTs. So that stands for Portfolio Management Token. And what that is it's an aggregator of all of the different types of projects that are inside of that token pair. And so it'll be represented, say for Ethereum, all of the projects that are Ethereum based. The PMT would be GETH. And so because of that protocol and the way that it's going to be set up with all of the different liquidity pools, there will be arbitrage opportunity between some of the different pools. And a lot of that is done automatically in the background. Once it hits a certain percentage threshold, whether it's like 5 or 10%, it'll be doing a lot of these different things automatically if people are not doing it themselves manually because they see the arbitrage opportunities. And so that's going to grow in value. It's some of the things that we're seeing with Growth DeFi is right now a lot of that protocol is on Balancer at the moment. They have plans to move that off of Balancer onto their own DAO, their own internalized system that there's a lot of development behind. And once that becomes live, you have your Grow token that are a shareholder of those particular projects. You have a lot of really interesting elements where you have the ability to be a part ownership share of this entire project with the Grow tokens. Now with the G tokens, you're more a part ownership share of that particular project on that protocol. So if it's Compound Finance, you would have GC DAI. So I picked up some GC DAIs, you can see here, and you can see a little bit of the performance. You can see the total locked value has grown a little bit over time, and there's a lot of interest with this because you will have an increased APY ability with these once these G tokens, these second layer G tokens launch and are put on top of that protocol. So that's going to be a really interesting innovation, something we haven't seen with these other projects. There are a lot of moving pieces when you look at some of these different things, but there's a purpose behind that you don't see with some of these other projects. You have the ability to aggregate all of these different DeFi protocols, and then you can increase your yield that you're able to earn inside of those by basically just holding these tokens in your wallet. Everything is done for you in the background. And I think once people begin to realize how all of these different things work, this could really grow in value. And that's why I think this has massive potential if you get into this early and you make a goal to try to get a certain percentage ownership share. That's one of the goals that I'm trying to obtain right now. I'm picking up Grow tokens, I'm minting and picking up GC tokens, G tokens, and I'm going to be really interested to see once these Type 2 G tokens launch, which should be any day here now. Once that does launch, I'll be sure to give you guys an update and go through that and kind of show you that whole process. I've done a few other videos, and I encourage you guys, if you're interested, to check some of those out. I go through and I break down some of the different ways to interact with this contract. It's pretty straightforward and simple, but there are some different elements that you may want to catch yourself up on and educate yourself about, because this is a really cool project. They have a great community. They've been around for a long time, over a year, and they have already 2 successful projects on the IOST blockchain, and they have expanded onto Ethereum, and that is really their push right now. And they've been using a lot of the things that they've learned in some of these other projects that have been very successful, and they are incorporating a lot of the things that are out there in the DeFi space, which are these lending protocols, some of these liquidity pools that we are seeing, just different things that we're seeing in the DeFi space. And it's a layer that's on top of a lot of those. So you'll have the ability to incorporate that into this ecosystem. And as all of these different projects grow, you'll have the ability to be a part ownership of that. And so I think that's a really exciting element. And I encourage you guys to get in the Telegram and ask further questions if you guys have some more insights in this project. So curious to hear your guys' thoughts. Let me know what you guys think in the comment section below. Be sure to like and subscribe, and I'll catch you guys in the next video.